From commodities to one of the biggest investors in the global resources sector, BlackRock. Some of its senior executives are out from London this week, and they're not impressed what they see as a bailout from resource stocks by many investors, depressing prices. I spoke with BlackRock's director and portfolio manager in the natural resources team, Catherine Raw. Catherine Raw, welcome to the programme.
Thank you.
Now, BlackRock is a huge holder of resource stocks. You've talked this week about your concerns of a premature departure from the resource sector by investors, and you sound a little bit frustrated with analysts.
Yes, I think our frustration really comes down to the fact that the markets are so focused on the developed world that they're missing the point, in our view. You're not seeing the supply issues that are caused by underperformance of operations, challenges in growing new supply, and still relatively robust demand figures coming out of countries like the US, countries like China and the rest of Asia, meaning that commodity prices themselves are remaining at elevated levels. Yet the equity valuations are not reflecting this. So we've seen huge underperformance of the equities relative to the commodities year to date because of this pessimism that is being created by the Eurozone issues. Now, clearly there is a tail risk there, that it spreads into the global economy and there is contagion. But from our point of view, that is being over-exaggerated in today's valuations.
If we take all the noise of the share market volatility away, what's actually going on in terms of the supply side in the resources sector, in terms of discoveries and the qualities of new projects?
Okay, so it depends on the commodity, but if I were to take the commodities we're overweight within the Global Mining Investment Trust, then I would say things like copper. Copper, you have issues of existing production under-delivering. We have strikes at the moment in Grasberg in Indonesia, Cerro Verde in Peru. We've had falling grades at major mines such as Escondida in Chile. And growth has been very subdued and is likely to remain subdued because the problems with the financial issues going on now is that the banks are not willing to lend as much project financing to the small and mid-cap companies. So you're relying on larger cap companies to deliver all the growth.
What about iron ore and concerns now about steel prices? I see Andrew Forrest yesterday was not surprised about Asia's destocking. He sees these prices as a temporary dip. Is that how you see it?
Yes, I think we would agree with that. So when you look at particularly China, which is very important for iron ore, what you see is that the steel industry sometimes grows too quickly and you end up seeing over supply of steel into the market, and that perhaps has happened this year. So we're in a situation at the moment where demand is softening around the edges. There's no point pretending that it isn't. You still have strong growth, but it's not as strong as perhaps people were expecting at the beginning of the year. For us, this isn't a structural problem with the with demand. It's just merely a sort of short-term destocking, restocking cycle that we see often in the industry. It's just at the moment, because everyone's so focused on whether or not we're going into recession or not, they're grabbing these small pieces of data and blowing them out of proportion, in our view.
There seems to be much less media focus on India, but how important an influence is India in the resource sector?
Well, it's very important for certain commodities. So thermal coal is one where we're really seeing the impact of India tightening up the Pacific Basin market. So India has very high rates of growth that's requiring significant power growth. The problem is they don't have the infrastructure and haven't developed the resources at the moment to supply that growth in power. So they're having to import thermal coal. And so what we've seen is very strong thermal coal prices, even in the midst of this relative nervousness, because we've seen this tightening up of the Pacific Basin coal market, and that is impacting the US coal market, the European coal market. So we're seeing prices across the board benefiting from the fact that India and China together are now tightening up that thermal coal market.
Another relatively new resource for us in Australia is coal seam gas. Now, it's becoming quite controversial. Is that something that BlackRock is investing in?
Well, I think it's really early days for Australian coal seam gas, but it clearly generally sort of non-conventional gas is becoming increasingly important. We've seen BHP move into shale gas in the US through its Chesapeake and Petrohawk acquisitions. The shale gas, the impact of that in the US market has been hugely significant. It's brought down gas prices. You're seeing moving from coal power stations to gas power stations. So there's been a real impact on the energy situation within the US. So the potential for that kind of change in Australia means it has to be something that we pay attention to. But the technical challenges, the geological challenges, the clearly social and environmental challenges, should you be using land for agricultural purposes or for coal seam gas, all of these issues mean that for us, at the moment in Australia, it's a case of let's just watch and see how this develops.
It's interesting what you say, because some people in Australia believe this has the potential to blow up in the industry's face if we get an incident like a leak into an aquifer.
Absolutely, and what I would recommend is that Australia learns from some of the challenges that are going on in the US at the moment. So you're seeing a lot of controversy over the Marcellus Shale, the impact that's having on local populations, whether it actually is contaminating aquifers, all those kind of things. These are the things that are occurring as we speak in the US. And so hopefully, therefore, Australia can learn from some of those mistakes. A lot of it is about communication. A lot of it is just about education and explaining exactly how you develop these seams, how you avoid things like contamination. And I believe that all of those processes will mean that hopefully the Australian development of these assets can be less bumpy, perhaps.
Catherine Raw, thank you so much for joining us.
Thank you.